Good morning. It is March 4th. Welcome to the mortgage rate forecast. Let's get started with some charts. Here's what we have. Bonds have actually opened better than where we closed yesterday, as you can see here with my mouse. However, we did get a lot of pressure today and seeing some bond sell-off. So we're currently trading at $102.03. We're under a lot of pressure. We're looking at a floor support right here at about $102. And as you can see, we're trading right at that floor. It's going to be important that we close today without breaking through it. Otherwise, our next support level is going to be at $101.60. That's 40 cents difference. So if you're getting a mortgage and you're quoted with no points for a specific rate that you chose, you could end up paying a little under half of a point extra if the market comes down and trades at this range. Now, unemployment came out pretty neutral as far as its impact on bonds. Average earnings helped bonds. The trade balance hurt bonds, and the non-farm payroll hurt bonds as well. So some mixed reports, but overall bonds have been pushed downward. The non-farm payroll was a big one because it shows that there's an increase in wages, and an increase in wages means that we could see more inflation as an economy. So any type of inflation as an economy actually will hurt bonds, specifically in this case, mortgage-backed securities. So here's the quantification. So right now, if bonds can trade off of this floor and go up to the top trading range, that's about a $90 difference. 90-cent difference, which is about just under a point. So if you were going to be getting a mortgage and right now you're being quoted, almost a point to get that specific rate you want, well, if the bonds can bounce back and start trading at the top of their range, then you could probably get that without a point. So that's actually kind of cool, but we got to keep an eye out. The bonds are still kind of getting pressured, and we are starting to develop a downward trading channel. So we got to keep a close eye on where they're going, obviously. So as far as the analyst outlook, Neil is moving to a bearish position on the short term. So he thinks the next 1 to 2 business days, bonds could actually sell off a little bit more. But long term, he's still staying pretty neutral. He doesn't think they're going to sell off that much. Dan's position is actually the same. So we do have consistency with the two analysis. So at any rate, here's my information if you have any questions, and be sure to like this before you go, please. And if you have any comments, would love to hear from you below. I reply to all comments. If it's your first time on the page, at your top left here is your subscribe button. Please subscribe. It keeps you updated on what's going on with the market as time goes on, and I try to do 2 recordings a week. And if you're not sure how bonds impact you as a consumer, click this icon on the top right. That will take you to Mortgage Bonds 101 and kind of teach you the impacts that this has on you when you're getting a mortgage. Take care, guys. Have a great weekend. Bye-bye.